Welcome to the Tomosi Business Training Series. The basis of these sessions is to support the Tomosi Group staff and management to raise their capabilities and performance. This is also a platform to share our experience with young entrepreneurs making an effort to build their startups in Uganda and across Africa. In this session, we continue to explore the principles of basic accounting. Enjoy!
Hello, welcome back to today's Tomosi Business Training Series. My name is Agnes Akech. Today we are going to look at financial statements. What are the categories of financial statement? We'll look at the balance sheet, income statements or profit and loss, statement of cash flows, statement of changes in equity. These are the categories of financial statement. What are the financial statements, or in particular, what is the balance sheet and its components? This is what we are going to look at and understand. The component of the balance sheet, the transaction behind the balance sheet, and what accounting equation is found in the balance sheet. Most cases, you find that the uppermost part of the balance sheets comprise of the assets, and asset is broken down into two categories: the long-term fixed asset and the current assets. We have the liability side, or the lower part of the balance sheet, which comprise of liabilities and equity. Yet again, the liabilities are also broken down into fixed or long-term liability and current liabilities. Then the last bit of the balance sheet is comprising of equity. Equity is broken down into share capital, retained earnings, and probably any other reserve. This is where the interests of the shareholders are taken care of, to see what they have injected into the company during the period of trading or during a financial year. We'll go further to look into the balance sheet, what a balance sheet is. This simply describes where a company stands at a specific date. Every end of year or every financial year end, people will come up and ask for the position. How is that company doing in terms of performance? They are simply looking at the balance sheet in summary. We'll go ahead to explore into the balance sheet, the topmost part of the balance sheet, which is assets. Earlier on, I said the assets comprise of long-term and short-term or current asset and fixed asset. The assets are made up in general of cash, accounts receivable, vehicles, inventories, equipments, buildings, land, deposits. These are resources owned or controlled by a company. Resources that a company or management uses to generate returns on the investment of the shareholders and other partners. In this breakdown, we have fixed asset included in this. For example, motor vehicles, buildings, land, equipments. These are fixed assets or long-term assets. Accounts receivable, cash, deposit, inventories. These are classified as current assets. What are the liabilities here? The liabilities comprise of accounts payable, promissory notes, wages payable, taxes payable. Accounts payable, we looked at it in our first series of the training last week. We said that these are suppliers of the companies. These are creditors, people who have provided us goods and services on credit. Wages, perhaps by the time the months have ended, you haven't paid your employees. So then it turns into liability that has to be paid at a later date. Taxes payable. The same way, the months will end and you haven't paid the VAT, remitted the VAT to the authority, or you haven't remitted the NSSF, income tax. All these have to be classified as liabilities, because at the end of the day, you'll have to make good of these liabilities as a company. We'll move further to look at the lower part of the balance sheet, which comprises of equity. Equity, as I earlier mentioned, this is where the owners claim on assets. Remember, when the owners inject funds into a business, at the end of the day, they are looking at the return on their investments in terms of dividends paid back to them. So, at the lower part of your balance sheet or financial position of a company, you will find equity. Equity is made up of majorly two components: retained earnings. Retained earnings here is accumulated profit, net profit or net loss. Every time a company makes a profit or makes losses, it is contained or it is lumped up in this section of the balance sheet. Equity is made up of capital contributed by the shareholders in terms of share capital. Then in the equity, you will also find dividends. All these are components of the balance sheet. Section 3, we are going to look at the income statement, which is still a category or type of financial statement. Income statement, we need to understand what it is, the transaction that affects the income statement, the income illustration. We are going to look at that. We shall look at the element of the income statement. The topmost part of the income statement comprises of revenues and expenditure, rather the revenues. Revenues is broken down further. We have operating income and other income. Operating income here means these are the direct sales that arises out of the activities or the services or goods supplied. Other income, these are like a by the way, income that you've gotten not because you've transacted on the core business that you conduct. For example, you can talk of gains on disposals of assets or foreign exchange for companies who have foreign exchange transactions. These are called other activities. They are not direct income, direct revenues. These are by the way. What is this income statement? Income statements depicts the revenue and expenses for a designated period of time. It summarizes sales or revenue and expenses that determines the profit or loss for the period that have just ended. Most cases is on a monthly basis. It is also called profit and loss to some people. What is this revenue we are talking about? Revenue is an inflow of money or other assets that results from the sales of goods or services or from the use of money or property. We said cash flow is broken down into two. There's cash inflow and cash outflow. This is the element or the component of statement of cash flow. I've already talked about operating activities, investing activities, just the summary to give you. Reports the cash effects of the acquisition and disposition of assets other than inventory and cash equivalents. The financing activities reports the cash effects of the sale or repurchase of shares or the issuance or repayment of debt securities and the payment of cash dividends. There are two major types of information that can be provided by accounting, that is financial and managerial. What are financial accounting? or what information can you find here, or what can it provide? One part of accounting focuses on presenting the financial information in the form of general purpose. That is financial statement, which includes the balance sheet, income statement, etc. The second type is management accounting. This basically focuses on stakeholders within the business or the company, and it provides company's management with the information needed to keep the business financially healthy. Although some of the information comes from recorded transactions, many of the analyses and reports include estimated and projected amounts based on various assumptions. Generally, this information is not distributed to people outside of the company's management. Other types of information that can also be provided by financial statement or accounting are advices on accounting system. You can also have income tax planning, advising and reporting. There's also element of auditing. Most of us are familiar. We may not know the nitty-gritty of auditing, but we know most companies do audit the financial statement of companies and other organizations. There's general business advice as well. You'll also come across financial planning for individuals. You can hire someone to do for you financial planning. The two major objectives for this information or providing information, accounting information, is to enhance planning or steer the planning process. The planning here involves developing objectives and preparing various budgets to achieve those objectives. Accounting is the language of business, and accounting is used in just about every department, group, team, meeting within a company, production, administrative, marketing, sales, and every other department is answerable to accounting department. In the preparation of financial statements, we'll still require accounting information. Accounts information can as well be used to evaluate the going concern of a business or a company. Accounting information is used to determine the company's going concern position. The going concern is the company's position related to its ability to continue meaningfully operations into the future. Ratio analysis is conducted to determine the company's financial position. So the experts or people who understand will always look into certain element of the financial statement and get to understand whether you're a going concern or not. Accounting information can help the process of budgeting, which we have touched on earlier. Operating a company without a budget is like steering a submarine without sonar or a depth finder. Cost accounting is the process of evaluating operations through the use of variance analysis. Variance analysis here, we are looking at the changes between one period or between 2 months or a year. This process can only be supported by information provided by accounting or accounting information. This process is also used to streamline operations and decrease man hours, raw materials consumption, service delivery time. Cost accounting has been used for several hundred years. This is actually used almost on a day-to-day basis. Variance analysis, like I earlier talked about, calculates variances in either direction, over or under, an established level of production, cost or labor hours. You had budgeted 5 and you've used 5. That means you've hit the target. Sometimes it's not bad to utilize your budget line or the revenue line, the cost line to 100%. However, you must be able to ensure that the consumption of this material have equally generated the return that you had targeted to achieve.
Enjoyed this session? We would like to hear from you. Please give your feedback using the Google form attached or email us at info@tomosigroup.ug and visit our website on www.tomosigroup.ug or tune into the Tomosi Business series on Facebook and YouTube to enjoy more of our weekly training podcasts. You can also visit our offices at Tomosi Business Park, Luzira, Port Bell Road, or call 0789 901 356.